Dear ladies and gentlemen, have you had your kick-up bar today? Well, this is Team K, and after our Nestle equity research, you would want to have one. My name is Diallo, and these are my colleagues, Marina, Yuri, Olha, and Paul. Nestle is a nutrition, health and wellness company, and the world's largest food and beverages market player.
We issue a buy recommendation for Nestle stocks with a one-year target price of 88.92 Swiss francs per share, delivering an upside of 9.45%.
Nestle would be an attractive stock for value investors who are looking for companies with strong fundamentals, such as stable dividends, growing earnings, and sufficient cash generation.
Our buy recommendation for Nestlé stocks is based on growing industry, favorable competitive position, reliable financials, and forecasted increase in company's value.
Nestle operates in the FMCG industry, the industry which serves people in their day-to-day life. Every day, we drink coffee, we use personal and healthcare products which are produced in this industry. The global consumer expenditures of the food and beverages industry are forecasted to continue their growth and reach $9 trillion by 2022.
And growth of the FMCG market is mainly dependent on companies' ability to adapt to global drivers. Amongst the drivers are growing population, its aging, and urbanization. Increase in personal disposable income gives people an ability to buy more, but also generates the desire for higher quality. While digitalization also gives the company an ability to be closer to the consumer, to deliver its products faster, and to understand consumers' needs better.
Sure, understanding of the consumer's needs is one of the core points of any company's success. We highlighted 4 of the strongest market trends: health and wellness, which is based on consumers' drive to escape from a stressful modern lifestyle; premiumization, poor time consumption, and products personalization, which is a growing trend in FMCG and mainly driven by a faster pace of life and higher digital expectations of consumers.
Nestle holds a leading position in many market segments because of diversification of its brand portfolio, wide geographical presence, and significant investments in R&D. The company has 2,000 brands in 7 segments with the focus on the high growth categories. Globally, in most business segments, Nestle's brands are in the top 3.
Wide geographical presence supports company's stability and prosperity. The Americas are currently generate 45% of sales. However, the company announced about its plans to strengthen position in Asia region.
Nestle has the largest research and development department in food and beverages industry. In 2017, Nestle's spending on R&D were higher than the peers' average. Nutrition is the core sphere for Nestle in terms of R&D. However, eco-packaging and personalized solutions are also under scrutiny of researchers.
Our buy recommendation is also proved by financial analysis of Nestle. We are sure that revenue growth, margins improvement, effective cash management, and an increase in profitability will help the company to achieve the target share price. Basing on the latest forecasts, we expect that Nestle's revenue extension will be driven by food consumption growth. We have projected future sales by analyzing each group of Nestle's products in all 3 regions separately, and our calculations show 2.7% annual revenue growth on average through the forecasted period.
Well, and to improve the financial performance and to make its strategy clear for investors, Nestle is restructuring its product portfolio. The focus will be on the most profitable segments, and judging by current market drivers, these segments are powdered and liquid beverages, waters, nutrition, and pet care.
Portfolio restructuring, together with premiumization, cost reduction, and strong R&D, help Nestle to meet its plans connected with margin improvements. Historically, Nestle's margins were above the peers' average, and according to all arguments which we have mentioned in this section, we are sure that this difference will be even more significant in the future.
Another benefit for investor is sufficient cash generation. Over the last 5 years, the company has generated cash flow enough to cover all investing and financial expenditures. This fact is coupled with a negative cash conversion cycle, which gives company an ability to pay all residual liquidity to its shareholders as dividends or share buyback transactions.
Moreover, we have forecasted a stable growth of the return on equity ratio. Firstly, it is because of net profit growth, fueled by improving margins and increasing sales. Secondly, Nestle will continue its share buyback program, which transactions reduce the denominator of the ratio. As a result, the company's equity capital won't rise as fast as the net profit.
Building up from our analysis, we came to an increasing value of Nestle that was confirmed by adjusted present value, discounted cash flow, relative analysis, and Monte Carlo analysis.
Free cash flow to firm was used for both DCF and APV methods. In order to increase our results accuracy, free cash flow was adjusted to a tax shield by using NOPLAT instead of NOPAT to avoid shield duplication. For terminal value determination, Gordon growth rate was estimated as 2.0% by calculating weighted average real GDP growth in 15 highest revenue-generating countries.
And for our intrinsic valuation, capital asset pricing model taking into account a country risk premium of 1.04% and inflation formed an adjusted unlevered cost of equity that was used to determine companies' total free cash flow and discounted. Then we discounted the tax shield by the tax rate and we came to an increasing value of Nestle of 90.33 Swiss francs. Furthermore, unlevered cost of equity, along with cost of debt and tax rate, formed an individual weighted average cost of capital for each period. This rate was used to determine Nestle's worth by the retrograde DCF with a dynamic cost of equity. And we came to our second intrinsic value of Nestle of 90.12 Swiss francs.
And from another standpoint, comparable company analysis was chosen for our relative valuation. Our peers are Unilever, PepsiCo, Hershey, Mondelez, and Danone. The first two multiples depends on enterprise value. The next two depends on market traded share price. As a result, forecasted price hit 86.3 Swiss francs.
Summing up three valuation methods, we issue a buy recommendation with a target price of 88.92 Swiss francs, composed by 2/3 of income approach results and 1/3 of market approach result.
And in order to test our valuation model, we carried out Monte Carlo analysis. We described the target price dependency on such factors as revenue growth, terminal growth rate, and others. As a result, Monte Carlo analysis confirmed our buy recommendation with a probability of 58%.
Our analysis gives us an opportunity to identify the main risks for Nestlé. There are 12 risks which are grouped into 6 categories, and so on. Risk of growing competition and increase in governmental regulation may have considerable impact on a company activity and thus on our forecast.
Present situation is characterized by quick growth of local brands, which create strong competition and take market share from big companies. But Nestlé mitigates this risk by making venture investments in new, innovative businesses.
Current adverse perceptions concerning health implication of the processed food may lead to an increase in industry regulation, which if adopted would result in increase of costs. In this case, Nestlé operates under a strict internal food safety control and works on its environmental footprint reduction.
So, stable market growth, favorable competitive position, reliable financials, and increasing value are the reasons you should put Nestle in your basket. This was Team K. Thank you for your attention. We are ready for your questions.
Okay, thank you very much, Team K. Good presentation. To be sustainable, as an analyst or group team of analysts, you should probably follow the company not until your report is done. So, do you know what's happened in the sector in the last couple of weeks and why stock prices dropped quite dramatically? Yes, no? And if yes, then what's implication for Nestlé?
Well, thank you for your question. One of the main reasons of that is the launch of the European Commission. To not take and not to recognize the Swiss Exchange Commission and market into its regulations. So if the Swiss Exchange Commission and the market was not ready to follow the rules and new fundamentals of the European Commission, this would affect its recognition on the European Commission. And so the stocks of any company on the Swiss market dropped dramatically, and Nestle is one of these companies.
I was talking a bit different. Kraft, its peer Kraft Heinz wrote off like $15 billion a week ago, and many companies lost a lot of value. Do you think such a huge drop in Kraft in one of its peers competitors might have an influence on Nestle?
As a big competitor of Nestle as Kraft, the reason for company such as Kraft dropping didn't actually depend on how Nestle would react, because as of the last 2 weeks, I would say Nestle's stock is rising. It hit 90 Swiss francs. Yeah, it dropped, and then as of my last information that I had, it hit 90.42 Swiss francs.
I have two questions. One is, what is the key revenue driver, key revenue growth driver, sorry. And my second question is the company planning any M&A activity in order to increase its revenue?
Okay. Thank you for the question. We're sure that key drivers for revenue growth are food consumption growth and growth of population. We have projected future sales by analyzing each group of Nestle's products in all three regions, Americas, EMENA, and EUA, separately. And we have researched the correlation between these factors and Nestle sales in the past, and expanding these trends into the future. So that's an answer to your first part of your question. And secondly, Nestle, we expect that Nestle will continue its M&A activity, and the management of the company announced that Nestle will find some companies to acquire in the future.
As we said before, the company is investing, and it has huge plans for itself to expand itself on the market. And M&A, for sure, would be one of the plans that they are conducting. But as individual researchers, I would say, we wouldn't have the information about the managerial decisions inside the company about any expected nearly future M&As until the company announces. But the company is investing. The company is trying to mitigate a lot of risks by investing, and M&As are one of the core spheres of its investing.
Yeah, and Nestle announced that it will invest in such sphere according to a strategy. Yeah, they will invest in nutrition, healthcare, also pet care, water. So they restructure their portfolio and focus on the categories which have really high growth, and to our minds that it will for sure increase its revenue.
And also to having success in the future, and according to strengthening position in Asia region, in my humble opinion, Nestle should maybe acquire some firms to have an insurance in case both in the market regulation in the USA will have a threat on the company. And for example, when we talk about the premiumization trend in Nestle, in this year Nestle acquired a blue bottle coffee, and in our opinion it wasn't a successful M&A transaction.
Well, some activist investors are calling for the company to be split up as it's too complex to operate. What segments would you think deserve higher valuation and which would be lower valuation compared to the blended forecast you have?
Well, thank you for your question. All segments in Nestle are very important to it, but as we said, that the company is trying to restructure its product portfolio, and the focus will be on the nutrition, waters, pet care, and powdered liquid beverages, as it's one of the highest revenue generating segments in the company. So these four segments, judging by all the market drivers that we have, would be on the focus of the company, and they would try to have the most of it and what they can make from these segments.
In your buy recommendation, you mentioned that as one of the arguments, perhaps, that Nestlé spends the most out of its peers on R&D. What do you think is driving the R&D costs at Nestlé? It's first kind of half of the question. And second, how do you think the expenses, the R&D costs translate into capitalization, and whether they actually do?
Okay, so what drives Nestlé's innovation? Of course, it's wants to be the leader of the market, and to our mind it's obvious that if you are an innovative company, if you predict demands of your consumers, you will be the leader, and thanks to strong R&D, Nestlé could do it. Also, as we mentioned, Nestlé focus their activity on the health segment, as well as eco-packaging and personalized solution is a great trend. These trends are really strong nowadays, and so that thanks to strong R&D, Nestlé is a leader now. Yes, and according to the next.
Yeah, and I would say that firstly, Nestlé is a mature company. It's more than 150 years. It's a very strong, it's very independent in the market. And one of the things and one of the plans for future development is actually innovation. And innovation is, as Olha said, it's always by research, by development, and by making its products more applicable to the nowadays consumers. As of the second part of the question, well, of course, R&D and any other products or any other investments that a company might make to strengthen its position or to make its consumers more satisfied will raise the, first of all, the general opinion of the company. It would raise the expectations of investors and of the shareholders of the company, and all of that will eventually give an uprise on the capitalization of the company.
Can I ask you, why do you put internally, you have a risk matrix, and there you put risk of increasing competition as high, like regulation. So if it's such a monster, a huge company with huge R&D and so innovative and successful, why do you think it's a high risk for the company?
Thank you for your question.
Please
Well,
answer.
okay, yeah, thank you for your question. Well, currently, small local brands are quite successfully growth, yeah, and of course, Nestlé is big, great and huge, but that's the problem. So Nestlé couldn't innovate or couldn't reach the demand of the market or change themselves as fast as the market, for example, and that's why local brands which are closer to the consumer, they could quicker grow and take market share from the Nestlé. That's why we put these risks so high. Thank you.